Top Services Limited, a leading property development company providing retail malls, recently launched a real estate investment trust offer, the TSL rate, valued at 20 billion naira with 20 million units for subscription at 1,000 naira per unit. It opened since February 1st, 2017. With First Ally Asset Management as its fund manager, it engaged capital market stakeholders at the facts behind the offer on the TSL rate. CEO of the Nigeria Stock Exchange, Mr. Oscar Onyema, commended the First Ally Asset Management on developing the rate and made a case for increased investor awareness on real estate investment trust.
This fact behind the offer is designed to enable the sponsors to provide information on the offering to the key stakeholders in the market. It shows the confidence the sponsors and fund managers have on the platform as a mechanism for bringing issuers and investors together. The NSE, with total market capitalization of 16.18 trillion naira across all of our asset classes, has implemented far-reaching transformational programs that have improved market access, provided products that are aligned to investors' requirements, several transparency initiatives such as broker tracks, X-compliance, X-whistle, compliance status indicator symbols, X-issuer, X-alert, etc., that have brought significant sanity to the marketplace and provided for a fair and orderly market. The NSE is positioned as a premier listing destination for African corporates, governments, and international issuers looking to access the capital market of the largest economy in Africa. I wish to encourage other fund managers to take advantage of the opportunities available in the real estate investment trust market through product innovations that meet investors' needs and appetite. I encourage investors to take advantage of the opportunities presented by real estate investment trust schemes, which typically offer stable and regular income distribution from diversified portfolio of real estate and real estate-related assets. The exchange promises to continue its collaboration with market stakeholders, from regulators to dealing members to fund managers, issuing houses, etc., to collectively promote increased awareness and education of REITs amongst the investor community in Nigeria.
Managing Director of First Ally Asset Management, Mr. Winston Ozuchukwu, gave a presentation on the value and essence of investing in the TSL Real Estate Investment Trust.
If we take a look at the four malls that have been chosen, all four malls have occupancy rates that are significantly above the benchmark we've set of 75. We're looking at Adeniri Ogunsi at 97, Apapa Mall at 82, Akure Mall at 90, and Koko Mall at 98. All the malls have unexpired leases of 28 years and above, but more important, each and every mall is anchored by the largest retailer in sub-Saharan Africa and the largest retailer in Nigeria, which is ShopRite. In addition to ShopRite, 3 of the 4 malls has as a sub-anchor Film House, which happens to be the second largest movie theater chain in Africa. If we take a direct look at those, ShopRite has been in Nigeria for a couple of years now, I think about 12 years now, with 22 stores operating around Nigeria. And their plans are to open a lot more. To give you an idea, they run a little over 700 stores in South Africa alone. So that gives you an idea of what they think of the Nigerian business, the Nigerian market. And what that tells us about this company is, 1, this company is doing very well. 2, their prospects in Nigeria are great. And 3, they are going to continue to grow, as we have seen all across. Our PEP stores, 1,600 outlets in Southern Africa. They started business in Nigeria in 2012, and they are available both in malls and standalones in a number of cities across the country. If we take a look at how the space in the mall is occupied, we can see that clearly between ShopRite and Film House, who are 2 major anchor tenants, they occupy significantly more than 50% of the mall space. That is significant. And if you look at what it means for our income, it means when you look at well-established businesses being your anchor tenants, we can be sure that these businesses will be around for the long term. And given that both businesses are in a growth phase, even though they're established names, We can be sure, number one, they'll be around for long term. We can be sure that they can continue to do business regardless of any momentary headwinds that they might face. And for the investor, they can be assured that the rental income from those people will continue to come. But when you now add all the other multi-location tenants that we have, which will be tenants such as KFC, Cash and Carry, Pep stores, and when you add them all up, you're looking at a case where about 80% of the tenants in these places are companies that are in the retail space growing significantly. And not only are they in the retail space, it's very important that we understand that all these companies deal in consumer non-discretionary items, non-discretionary goods and services. And the reason why that is important is this. No matter what happens in an economy, there is some spending that you honestly don't have any choice but to make. When it comes to money you spend on food, clothing, healthcare, and basic entertainment, the only question is how much will you spend, not if you will spend. And the clear thing is, with businesses that deal in this area, the only thing that changes for them is the level of revenue, not will people buy or not. But even if we take it one step further and look at people like retailers like ShopRite and the rest of them, oddly enough, and this sounds very counterintuitive, when we have a downturn in the economy, these people are able to extract, the likes of ShopRite and other retailers are able to extract larger margins from smaller players, because those smaller players are desperate to make sure that their products get the right placement, and they're desperate to move those numbers. So ShopRite and the likes of them are able to actually extract larger margins from those retailers. So what tends to happen is, as us, the consumer, might step down in quality. And like I said earlier today, we might go from a Nestle water to an Ikeja water, whoever Ikeja water is. But the fact that we'll buy water will continue to be. Meanwhile, on the ShopRite side, they went from a 5% margin to a 20% margin on the same product, even though that the client has gone down a little bit. So what you will find is, as the consumer continues to struggle, what the consumer does for non-discretionary spending is change volume a little bit, but most likely move down in CADA. We might not be consuming the super premium items and the premium items, but the basic everyday items will continue to be parts of our everyday purchases. And this is important to note, because people in this business are going to be in business regardless of where we are in the economic cycle. And if they make up the vast majority of our tenants, then we can rest assured that we'll continue to get our revenues as the years go along.
He speaks further on the offer, the opportunities, and the outlook for the retail sector.
One thing it's going to bring is giving Nigerian investors the opportunity to invest in retail assets, especially retail malls. And like I said earlier, if you look at retail mall ownership, the vast majority of retail malls are owned by foreign companies. But the other thing is, it's allowing the Nigerian investor to invest into this asset class in a very risk-averse manner, in that all the major risk, development risk, construction risk, and the risk of being able to let out the building, which I call seasoning risk, all those risks have been taken care of, which is we're going to be acquiring assets that are built, operational, and with very high occupancy rates, all in excess of 80%.
Why is the TSL rate valuable at this time? What is it for investors if they go into it?
Well, if you think about it this way, when we talk about a high inflation environment like we find ourselves, any investment that does not start to give you some protection against inflation will leave you with sometimes next to zero or negative real returns. This particular investment is underpinned by functioning real estate assets. And now, so if you want to think about it, the real estate assets themselves offer an inflation hedge. And here's how they do that. If you look at a mall, as long as that mall is there and those assets are there, and that is a place where people continue to trade, there is a replacement cost to it. Now, if for some magic way you can build that same mall across the street, the cost of building that mall will be significantly higher than the cost of the mall that you've just acquired, just based on inflation. So right there you get the protection, because if you offer to the person at the exact same cost as it will cost him to build, he will buy it instead of wasting time building it. The second thing is, because the rents are going to be agreed in dollars, which is a low inflation currency, but are payable in naira, high inflation currency, same thing happens. So you are paid the rent is calculated based on a low inflation currency, and so when you're paid in a high inflation currency, those yields become significantly inflation protected. So our investors are going to be able to invest in real estate linked to commercial activity, activity that is based around consumer non-discretionary, which is a very defensive posture in the market, and be able to get steady returns out of it. And more importantly, it will be listed on the stock exchange, so they'll be able to buy and sell as they wish, and will not have all the other inherent problems that comes with owning real estate.
And finally, what's the outlook for the retail sector, the real estate sector in Nigeria, considering this is where you're really playing? We see the recession, and we even see fiscal policy come into play to recover the economy to growth.
Well, here's the thing, and this sounds counterintuitive to a lot of people. Believe it or not, Nigeria is the top retail market in sub-Saharan Africa, and not by me. A.T. Kearney publishes a research piece every year talking about which are the best markets in the world for retailers to go into. Nigeria is listed number 19. We are actually ahead of Brazil. And the question is why? It's simple. As we continue to urbanize, the people in the village go and shop in their little village market. The people in the cities need, quote unquote, their village market. And your village market is your neighborhood malls. And these malls are starting to come in. And as these malls come in, the retail trade, the organized retail trade is going to continue to grow. And also remember, people that have been in retail for 30, 40 years in an organized manner. They've done it very successfully. What we're finding now is we're going to the next stage in that evolution of retail, into more organized retail in fixed, well-built facilities where customers can come and interact with sellers in a very comfortable manner.
The Real Estate Investment Trust is one market that needs increased activity because of its capacity to deepen the capital markets. It is expected that the addition of the TSL Real Estate Investment Trust will achieve this.